Hello again, thank you so much for joining me for another video all about brokering private money and commercial mortgage loans. One of the biggest misunderstandings about private money brokering is this idea that the broker is just the middleman. Now that couldn't be any further from the truth. In reality, the broker controls the deal without putting up capital, without signing a note, and without taking any lender level risk. And in this video, I'm going to show you exactly how that works, because once you understand where the real control is in private money, this business starts to look very different. Now, if we haven't already met yet, my name's John Newfer. I'm a private money lender, mentor, and trainer. For the last decade, I have helped hundreds of private money entrepreneurs achieve their goals comfortably from home, and I hope to help you achieve the same results. Now, let's get back into today's topic. So if you're joining us for the first time, this is video 8 in a 12-part series all about brokering private money and commercial mortgage loans. I'm gonna put a link at the top of the video to the playlist so you can go back and get some context to what we're talking about. Now, most people assume the lender has all the power. In private lending, it's actually not a scarce capital source. You see, capital is everywhere in private money lending. What's actually scarce is clean deals, qualified borrowers, and people who know how to structure the transaction properly. Now, that's where the broker comes in. The broker controls the deal because brokers control the information, and whoever controls the information at the end of the day controls the outcome. Now, let me break this down simply. As a broker, you control the deal at 4 points. The very first is deal intake. You decide which deals even land on the lender's desk. Bad deals shouldn't get submitted, and good deals, hopefully, if you're good, will be packaged properly. The second point of entry is framing. Lenders don't just fund numbers, they fund stories, and you control how the risk is explained. You control actually how the exit strategy is presented and how the borrower's experience is positioned in the deal summary. Now, you may have the exact same deal between two different brokers, but you can get completely different results for that framing reasoning right there. Now, the third point of control is lender selection. You're not here to beg lenders to fund your deals. You're choosing the right capital partner for your deal, period. That alone gives you a majority of the leverage on the deal. And the fourth point of control is speed and process. Time kills all deals. So deals that stall out are the ones that actually die. If you're a broker who knows how to control conditions, who knows how to keep timelines, and understands the sequencing of submitting the proper conditions, you're the one who's going to be funding those deals, and the lender can't control any of that because you're in control of the deal. You're in control of that process and the speed that the conditions come in. So being the broker, you're in control of whether the deal even funds or not just through your speed and processes. You know, I've seen so many deals come through the door where the borrower gets on and signed, and the bad broker doesn't know how to manage timelines and submit the conditions, and the deal dies. Now the lender's pissed, the borrower's pissed, and the broker didn't make any money. But if you're one of the fantastic brokers who understands the processes and the timelines, then you're going to be able to get those deals funded smoothly. But guess what? That just shows you the broker's in control at the end of the deal. Now, here's the part most people don't understand. As a broker, you participate in the upside without balance sheet risk. You're not funding the loan. You're not signing the note, and you're not carrying any default risk. You are not even managing the asset after closing, yet you still get paid origination at funding with your compensation disclosed on the settlement statement. Now, that's what we call asymmetrical upside, and that's exactly why so many experienced professionals start as brokers before they become lenders or investors in these notes. Now, if your long-term goal is to become a lender, raise capital, and start a fund, or even just invest in the deals yourself, then brokering is clearly the smartest place to start, because brokers see the deal flow first. They learn the lender psychology, they understand pricing capital before it's even deployed. You don't guess how the game works. You see it from the inside out, and as a broker, you get to see all the inside underwriting, the thoughts of the lenders, the pricing. So when you go to invest in these deals yourself, you know exactly what the market demands for that kind of deal, and you're going to be able to optimize your profit margins as a direct investor or a direct lender. Now, where most new brokers go wrong is mindset. They think they need permission. They think they're just passing information. They think they're not experienced enough. And that's the mindset that kills deals. The broker who understands they are the architect, not the messenger, is the one who's gonna get paid more consistently. Don't make that mistake of thinking that you have to ask permission and not having enough confidence. Remember, you're the deal architect, so you're the one who kind of determines how the bricks are laid. So make sure that you're walking into the deals with the right kind of confidence and not with your tail in between your legs, asking permission from the borrower, asking permission from the lender. The brokers that close deals more consistently are the ones who are taking control and taking initiative and have the confidence. Now, if what you learned today really resonated with you, I want you to consider joining our Private Money Accelerator, where we do a deep dive into how to control these deals professionally, how to speak to the lenders with respect, and how to structure transactions in the right way, and really how to protect yourself while maximizing your income. And if you want to operate like a professional broker, not just a lead pusher, go ahead and click the link below. Now, don't forget, there is a special bonus coming at the very end of the series. I know it's been a long series, 12 videos. Just wait, it is going to be there waiting for you on a golden platter. Now, in our next video, we're going to be talking about the lifestyle of a broker and why this business looks nothing like traditional financing. I want to thank you so much. We'll see you in the next video.